Hey, Michael, you keep popping up in my feed. You've gone viral with some comments you made at the Bitcoin 2025 conference in Las Vegas recently. And it was where someone was asking you about proof of reserves for strategies 567,000 Bitcoin.
Does Strategy have any plans to publish their on-chain proof of reserves?
Yeah, proof of reserve. It's an interesting thing. Let me make the following point.
You called out Michael Saylor about proof of reserves. What's going on? You're like the legend in the room now all of a sudden. All right, welcome back to the Byte Federal Podcast. My guest today is Mitchell Askew, head of Blockware Intelligence. He leads the research division of Blockware. Mitchell, you are just like hitting the circuit now because you called out Michael Saylor and about proof of reserves. And man, what's going on? You're like the legend in the room now all of a sudden.
Thank you. I appreciate it. And to be honest, Paul, it was a very spur of the moment decision. I had a chance to ask him a question, and that's literally the only thing I could think of. But the way it's resonated with a lot of people, I can tell I wasn't the only one thinking this. And I've learned a lot over the last week. It's kind of a more nuanced discussion than I originally kind of thought. I was like, yeah, there's no reason not to do proof of reserves, which I still, if gun to my head, I'm saying, yeah, they should do proof of reserves. But Saylor does bring up a few interesting points as to why it's not necessary. And the first and foremost that thing is like, hey, if you don't trust Saylor, buy Bitcoin, put it in cold storage, keep it in your self custody, because at the end of the day, if they don't have the Bitcoin, or if Coinbase is rehypothecating it, which I don't think is true, but if that's actually the case and that got exposed, it's the MSTR shareholders who would get hurt, right? It's not the people holding Bitcoin in self custody.
Yeah, 100%. So, but I think the shock for all of us was that he was so adamantly against it, right? Like, because it just seems like not that big of a lift, and there's other companies doing it already.
Right.
That are playing similar game. They see value in it. Bitcoiners see value in it. So I don't know. I mean, I did hear, his response, and I can kind of understand that, but it's like, this is just a public address, and maybe you should change up your buying strategy a little bit. Maybe you should be a little more creative instead of always buying the top.
Right.
I mean, he's telling
I
everybody when he's buying anyways. So what is he really?
Yeah.
He's letting everybody front run him anyways.
Yeah. His
I
whole
don't quite
is
understand the. Maybe you can enlighten me on this. I don't quite understand the counterpoint as to why he needs the secrecy.
Yeah, his whole point before I even asked him this question was that strategy is very transparent. And that transparency of, we're going to buy Bitcoin, we're always going to buy Bitcoin no matter what, allows investors, whether you want to go long, short, sell options, buy options, no matter how you want to interface with the equity, that they're fully committed to the Bitcoin strategy and they're going to continue to accumulate. And so to me, proof of reserves is kind of like the end of that transparency road. And
Right.
to give him some slack, I do think the question caught him off guard. It shouldn't have, but within the context of that event, it did, because it was a Bitcoin for Corporations event. Everyone there is like ultimate Saylor fanboy, like the peak cream of the crop, like irresponsibly long MSTR, that crowd. And so I don't think he anticipated kind of an antagonistic question, which I
Hmm.
didn't mean it at all. It's very much a neutral thing. And he
Sure.
actually went on CNBC this morning and they asked him hit again. And he had a bit more of a polished response. But like yourself, I was very surprised at how adamant he was against it.
Yeah. Yeah. Especially when others are doing it, right? So, I mean, this actually, and I don't know if others feel this way, but it kind of made me more interested in meta planets, just for this reason, right? Like, if you're going to support transparency, and as Bitcoiners, that's sort of the entire culture of what we're trying to do. Don't trust, verify. This seems to fly in the face of it, and that was really, I don't know, that was eye opening for me. I think you're right. A lot of the MSTR fan club is going to defend it because they're going to defend their bags, right? So,
Right.
um, but I don't know. Do you think this this makes people think twice and look at treasury companies that are being truly transparent?
Yeah, absolutely. This is going to be an area where we can see other treasury companies distinguish themselves because let's be honest, strategy, they're far ahead in terms of quantity of Bitcoin. Nobody's going to catch them in that. Nobody's going to catch them in terms of trading volume, options, open interest, and a lot of these things that allow them to create Stride and Strife and Strike and convertible notes. All of that, the foundation of that is they have so much trading volume, they have so much volatility, and they have so much Bitcoin. So no treasury company can compete with them in that regard. But where you can see other treasury companies compete is the rate at which they increase BTC per share. So, for example, 21, they're starting from a lower foundation, 42,000 Bitcoin or whatever. It's a lot easier to go from 42K Bitcoin to 84K Bitcoin than it is to go from 500,000 to a million. And then the point you bring up, which is the proof of reserves. Now, as an investor, I'm thinking more like maybe I want Metaplanet and 21 and Nakamoto down the line because this is an area where they could be a little more transparent than strategy.
So that makes me wonder about what you think the ideal proof of reserves would be, or how Bitcoin treasury company would ideally disclose their holdings in a safe and transparent way.
To me, the Metaplanet model has worked very well. They have a mempool.space dashboard and it aggregates all of their addresses and you can see at any time. I think probably the most practical approach, and I'm not an operating officer at any of these treasury companies, so maybe there's logistical and technical things I'm not fully in tune with, but you could update quarterly. I don't see any issue with that. If you're going to update your financial statements quarterly, your assets, your liabilities, to me, that would be a time frame where like, hey, you're not, it could be a pain in the butt to update regularly. Maybe you don't want people tracking everything, but every quarter that quarter's Bitcoin you accumulated, new address that you don't share with anyone until the quarter end financials. To me, that makes sense.
Yeah, because the whole argument about an auditor being sort of the stamp of approval. How many times in Wall Street have we seen that fail before? Right? I mean, this has been sort of the key point behind a lot of fraudulent companies on Wall Street. And I'm not saying MicroStrategy is fraudulent, right? I'm not saying that. What I am saying though is that as an auditor who's trying to do the best job possible, wouldn't you like to see the proof of reserves as opposed to us not knowing whether they are actually auditing the reserves or not? Because there's been lots of cases where in hindsight the auditor hasn't done the proper job and they pay the fines and they move on and the shareholders left holding the bag, right? So that to me is, I think, the big risk that Saylor could very easily, or strategy could very easily put out that fire without much of a heavy lift. So the fact that he hasn't or won't remains to be seen, but I don't know, it definitely raises a red flag, and I think you did everybody a service by calling it out.
Thank you. Yeah, that was my goal, was to just start the conversation because I genuinely wanted to know as a shareholder, is this something we can look forward to and expect? And you're right. I mean, Bitcoin is the best auditing system. The point of Bitcoin is that you don't have to trust. You can verify for yourself. It theoretically puts Big Four out of business, and it's the ethos of Bitcoin. And so I'm surprised that they haven't done it, but I do think we can, as the Bitcoin community, can shift the Overton window, especially as we see these other treasury companies start to do the same thing. Because 21, Jack Mallers tweeted out their addresses this week. He's like, hey, here's a few thousand coins from SoftBank. Here's some from Tether. Here's some from Bitfinex. And this is going to be our treasury. You can look at it on
Right.
chain. So I think at some point the pressure may mount and force Saylor's hand in a way.
Yeah, so we'll see. We'll see what he does. So
Yeah.
thank you for
One more
asking
point
that
on this
question.
too is one more point I would add is I don't understand why strategy, they're $100 billion company. Just acquire a custodian, acquire a BitGo, or build your own in-house custody. You don't have to rely on Coinbase, in my opinion. I think that would, even if they don't publish on-chain proof of reserves, simply owning the custodian rather than having another party intermingled, I think would do a lot in terms of just easing the minds of shareholders.
Really? That's interesting. I hadn't heard that take. I've always thought of that on a publicly traded company, you would be incentivized to have a trusted third party as the custodian, meaning you would want custodianship to be separated so that there's not a conflict of interest between the corporation and the custodian. Maybe I'm thinking about that wrong, but have you put any thought into that?
I don't see any conflict of interest personally. To me, it's about minimizing third-party risk. And I know custody for an institution of that size, for a Bitcoin stash of that size, it's not as simple as taking a cold card and getting 12 words and Saylor shoving it in his desk. It's very intricate. There's going to be many different types of multi-sigs and all sorts of different setups that we probably as normal people can't even comprehend the technical lift of that. But Strategy is positioning themselves as the Bitcoin company. So to me, like a Bitcoin service is custody. If Coinbase can do it, so can Strategy, because Coinbase is out here listing fart coin and not buying any Bitcoin themselves. So, if they're capable of it, I'm fully confident that Saylor and Strategy can figure out a very secure solution.
Yeah, for sure. I mean, for sure. He could talk to his AI and they could figure it out.
Right.
Um, all right. So let's move on from that topic. I think you asked a great question. We're gonna have to see what happens down the road if Saylor becomes more fiat over time or more Bitcoin over time, to be determined. So I also wanted to touch on the book you wrote, The Conservative Case for Bitcoin, and I wanted to find out from you, like, what was the driving force behind writing that book? What was it that motivated you to take that on?
There was, I would say, three primary forces. One was just a personal thing. I've always wanted to write a book since I was a kid. And to me, it was like a bucket list item. I was thinking in my head, oh, wait till I'm older. I've learned stuff and I actually have something to write about. But then I got so hyper obsessed with Bitcoin. I'm like, I have so many ideas. I just need to get them on paper. Second reason was I wanted to orange pill people in my life. So it's a lot easier for me to get someone close to me to read my book because I can almost guilt them into it versus say, hey, read the Bitcoin Standard, something that somebody else wrote. But the third reason was I started writing this in 2023, and I could see where the puck was going in terms of the politicization of Bitcoin. And to me, it's obvious how much Bitcoin aligns with right-wing values because I would see tons of people on the right complaining about government overreach and the Federal Reserve and all these woke three-letter agencies that are infiltrating and undermining family values and welfare and just a plethora of issues. And to me, it was obvious, hey, Bitcoin actually fixes all of this. If you want to limit the size of government, you're not going to be able to do that when they can print money. And so you have to separate the government from money. And so Bitcoin is the best way to do that. And there's a few other points I elaborate on the book, which we can dive deeper on. But that was the primary reason was I could see that Bitcoin was going to become politicized. And I wanted to make sure that conservatives, people that love America were all in on Bitcoin.
So you're aligning, I want to make sure I understand, is it an alignment of conservative values or American values? Right? Because I think a lot of like what I personally see in Bitcoin is these American values or these constitutional values that we hold dear and has made this country as strong as it is, and that over time we've drifted away from those core values, and Bitcoin sort of realigns us there. Is it really it's like, it's not really a Republican Democrat thing, right? It's more of a American value thing. Would you
Right.
agree with that?
But in my experience, Democrats don't really hold tight to American
Right.
values. They're not very patriotic. And so
Right.
some of those values, to be less vague, it's like freedom of speech. If you're a fan of freedom of speech, Bitcoin is the penultimate form of freedom of speech because you can say or transact in any way you want. If you are pro like federalism and states' rights, that many like Republicans or conservatives don't think of it this way, but that is decentralization. You want to separate power from a centralized entity, the federal government, and give it to states, to counties, and to towns. And so Bitcoin is obviously decentralized. Another thing would be traditional family values. People on the right, especially, they'll blame feminism and all sorts of things for why the nuclear family has kind of eroded away. So, over the last few decades, people are getting married later. We're seeing more dual income households. People are having fewer kids. There's more divorces. And I think fiat money, and this is the case I make in my book, is the driving force behind all of that. And so there's so many different areas in which I see Bitcoin aligning with conservative and traditional values.
It's interesting because for me, I'm probably twice your age. And the Republican Party today reminds me of the Democratic Party I grew up with when I was your age. And
Mhm.
so it's like everything has drifted so far away from what I grew up with that I feel like it just the party like the Republicans just became Democrats, and the Democrats moved more towards communism, quite frankly, with their social values. Because I remember the Democratic Party I grew up with was very much a small government, anti-war, um, so and held all the social values that I think a lot of the Republicans do today. I mean, I have lots of Republican friends in Florida running around that are uh, multilingual, are multicultural, and have friends of all colors, sex, and race, and sexual preferences, um, but still believe in these core American values. So this is it's a it's an interesting thing that's happened culturally to us over the last, I don't know, 30 years, I guess, 30, 40
Right.
years.
And we don't have to dive into the nuances of what's conservative and what's not, but I will say I don't think the Republican Party represents conservative values at all. I mean, take this big beautiful tax bill for example. What is it? It's
Yeah.
a $5 trillion spending bill.
Hmm.
That's nothing about that says small government, and
Right.
the government spending at this point, it's not a red versus blue thing. I think both
Sure.
parties are corrupt. They kind of all work in unison. And so I to me, I'm speaking to like not necessarily Republicans, but independent critical thinkers. People like my dad. He's of the baby boomer generation, loves America, pro family, pro low taxes, but not necessarily married to one political party or the other.
Right. Right. I think that's very well said. That because as soon as you align yourself with a specific party, you're going to be making all sorts of errors, and you're really not thinking critically. So I think that's very well said. So that's great. So, um, you talk about um, economic and I guess cultural conservatism then kind of coming together here. So, um, paint a picture for me about how your book and your thoughts on how Bitcoin aligns with those, and maybe some specific examples, so that we get a better view of the culture of Bitcoin. And do you think? Sorry, this is a really squirrely question going all over the place. But do you think Bitcoin's holding, still maintaining those values, or do you think it's drifting as well now, especially maybe after the Bitcoin conference that we just went to?
Yeah, so I'll start with economic conservatism. And to answer your last question, no, Bitcoin itself isn't changing. The people interfacing with Bitcoin is changing. The world around it is changing. But Bitcoin's just a protocol. It's 2 + 2 = 4. That doesn't change no matter what kind of math you do around it. And so a block every 10 minutes, 21 million supply cap, halvings every 4 years, difficulty adjustments every 2,100 blocks. Nothing about Bitcoin is changing, but we are seeing the world conform around it. And to start, Bitcoin aligns with economic conservatism more so than the dollar and the current fiat financial system. And I'm sure you'll agree with much of what I'm about to say. But the illustration I use in my book is price controls. And so any conservative who studied economics, they're going to be against price controls. They're going to say, no, we shouldn't have a minimum wage. We shouldn't have rent limits. All of these things cause distortions in the economy. So when the government tries to manipulate and set a certain price, you get a mismatch between supply and demand. So for example, if the government says, landlords, it is illegal for you to charge more than $2,000 a month in rent. So rent prices have artificially been lowered. So you're going to get an artificial increase in demand, and you're going to get a decrease in supply because you're going to see fewer landlords willing to rent out at $2,000, and you're going to see more people wanting to rent at $2,000. And so there's going to be this surplus of demand, and supply isn't there to meet it. So conservatives fundamentally understand the damages of price controls, but what many haven't realized is the entire foundation of our system is built on a price control. So the price at which we borrow money is manipulated by the Federal Reserve, and it's manipulated by the Treasury continuously issuing Treasury bonds and the Federal Reserve being able to buy those bonds. And over time, we've seen interest rates get lower and lower and lower. And we've hit the lower bound, and we're starting to see how how destructive that is, right? The foundation of the systems is crumbling. And when you make it artificially cheap to buy money, think about what happens. Well, you're going to get to borrow money. You're going to get more demand to borrow money. But what makes this different is, one, money is at the foundation of the economy. So when the foundation of the economy has a price control on it, you're going to see it destroy every area of the economy. Versus if it's San Francisco passing rent controls, that's really only going to affect San Francisco. And so it's affecting the entire economy. But on top of that, there's no cost for banks to lend money. So when the Federal Reserve artificially lowers interest rates over multiple decades, it's not like, when rent controls are set, landlords can't build more properties immediately. All it takes for a bank to lend money is just strokes on a keyboard. And so they're actually able to supply that artificial demand. And this is how we have $37 trillion in debt, record high credit card debt, all this debt in the system, because interest rates artificially lowered, increases demand to borrow money, and the banks can actually create that. And it's at no cost to them, right? Because it's a fractional reserve banking system. They're not actually incurring any true risk when they lend money. If they don't get paid back, the money they lent out, well, the Federal Reserve will backstop them if they're a large enough bank. And so we have an entire system built on debt because of this artificial lowering of interest rates. And one thing that does is it causes a bunch of zombie companies. So the idea in economics class is lower interest rates are good because more people will borrow money and go start businesses when they otherwise wouldn't, create economic activity. But what happens is people start worthless businesses, and they can continue to refinance because the cost of borrowing money is so cheap. Saylor, one of the points he's really been hammering recently is that something like 95% of publicly traded companies underperform the S&P 500. So they're underperforming the very base benchmark. In a true free market where the price of money is not being manipulated, these companies would have been washed out long, long ago. And that sounds, maybe that sounds like a bad thing, but business cycles are natural, right? If you're not providing goods and services that are valuable to society, you should be eliminated. You're destructive to capital in the aggregate. But lower interest rates has allowed these capital destructive entities to exist continuously.
Yeah, for sure. I do agree with everything that I've seen Saylor say on those points, and that does make the case for the Bitcoin treasuries. But I'm curious, from the perspective of your book with conservatives who might be aligned with a strong dollar and supportive of the Fed, has there been pushback there from those readers that don't trust? Because I do have conservative friends that are very much aligned with gold, but very fearful of Bitcoin. So have you received similar feedback?
Yes, sir, absolutely. And there's a subsection of my book titled that Bitcoin is more patriotic than the US dollar. So I
Awesome.
tried to appeal to that because when we think about patriotism, put yourself in 1776. What were the founding fathers thinking? What was the sentiment there? People didn't want taxation without representation. They didn't want the government confiscating your wealth without you being able to represent, at least, vote for or against certain taxation. Paul, I don't know, I did it, but did you get to vote for Jerome Powell? Because
No.
I didn't get to vote for Jerome Powell. And so the Federal Reserve, they manipulate the price of money, they manipulate the supply of dollars. That is a hidden tax. Inflation is a hidden tax, and we, the American people, have no say in that. And so the dollar in this system is fundamentally against what the country, what the United States of America was founded upon.
Right.
Bitcoin gives
The current dollar, that the Federal Reserve note in particular, right? Because we have had constitutional dollars in the past. We had dollars issued by the Treasury that were not backed by debt. And we had a very prosperous economy during those eras. And I think a lot of people don't look back, like you just mentioned, they don't look back through history long enough to realize how many wars, how many assassinations, how much manipulation or fraud in our own government took place of all around creations of private banks and central banks. We all like to start this discussion in 1913 and not talk about how many of our presidents fought wars to prevent the creation of central banks or were assassinated because they opposed it. And that piece of history, or that bit of history, kind of reminds us that we're re-engaging in this cycle again, and that Bitcoin was created to replace the central bank. Bitcoin was created to separate the state from money. And I wonder, with so much of like the Bitcoin conference, the Bitcoin mantra today is about how Bitcoin's going to help the dollar, how Bitcoin's going to help the Treasury. Have we lost sight of that end goal, or do you see it more as like a Trojan horse that is coming into the system, and it just is going to be the way that we achieve our end goal?
I see it more as a Trojan horse, and I don't think it's the Bitcoin people that have been around for 4+ years that are rooting on, hey, let's keep the system going as long as we can. It's the fact that Bitcoin is money for enemies. It is permissionless. So whether we like it or not, the US Treasury could start issuing bit bonds. Wall Street, people in suits, Larry Fink, Jamie Dimon, these types can interface with Bitcoin, and there's nothing we can do to stop them, but that's a good thing. And so I think if the Treasury starts to kind of back the dollar with Bitcoin in some sense, or issue bit bonds so they can continue to borrow at lower rates, I think that's a good thing. One, it's going to bring more capital into Bitcoin. But two, I actually don't want to see hyperinflation in my lifetime. I don't want to see the entire system collapse overnight, because whether or not, maybe that'll send Bitcoin to $10 million overnight, that's not going to be a fun world to live in. It's going to be chaos. It's going to be difficult to actually get goods and services. And so I think ultimately it was kind of inevitable, and it's a sign that Bitcoin is winning. And the downstream effect of this is that it does impose honesty into the system, because it legitimizes Bitcoin, and Bitcoin starts to become the new rate of return, the new risk-free rate. And every investor, every individual, family office, hedge fund, they're going to start comparing businesses to Bitcoin. And furthermore, Bitcoiners are going to get wealthier. So OG Bitcoiners, which I don't know what we classify as OG now, 2017, 2021, but Bitcoiners who really hold true to the ethos of Bitcoin, we're going to get to influence the world, because we're going to have more capital, and we understand that the best way to vote is with your dollar. Well, with your capital, how you spend, and how you save money, right? One great example of this is Steak and Shake. If Bitcoiners were not wealthy and not the way we are, they wouldn't have pivoted to Bitcoin and to beef tallow away from seed oils, right? But they can see this cohort of people is a wealthy enough base where we want to attract them. We want them to come purchase our goods and services. And so they go all in on beef tallow. And I think, unironically, we're going to see more food companies do that, because Bitcoiners are going to be a wealthy group of people, and we're going to impose our values on society. We're going to start say, hey, I'm not going to McDonald's. I'm going to Steak and Shake. Like McDonald's, if you want to compete in the marketplace, you're going to have to adopt beef tallow. And so I think that's kind of a microcosm of what, the world that Bitcoiners can create when the Treasury pumps our bags effectively.
Yeah. I do think as well it's a Trojan horse. and I agree with you that it would be nice to transition as opposed to collapse, right? And so I think that would be better for everybody. And I really thought Saifedean's talk at the Bitcoin conference kind of illustrated the potential with Tether for a slow transition to uh, a better understanding of the value Bitcoin is creating over time, where people could see that a Tether with a percentage backing in Bitcoin starts to outperform fiat. And that to me sort of reframed this as a Trojan horse that would allow for a smooth transition. And so that was very like that was one of my favorite talks because it was so hopeful for humanity. But
Right.
yeah, I'm still on the I still go back and forth, right? I still go back and forth because um it is going to it could prolong a system that we all know um uh, needs to go eventually.
Right. Yeah. I feel it's like a grandfather clock. Sometimes it's over here. It's like burn it all down tomorrow. And then over here, it's like, well, maybe a gradual transition would be more fruitful for everyone.
Yeah, exactly. Exactly. So I'm I want to maybe transition to macro because with your background in the writing that you do, it sounds like you've got a really good grasp of that stuff. Is that something you studied in college, or how did you get on that track?
I did study economics in college, but it was Keynesian garbage nonsense. So I will credit pretty much all of my learning to the Bitcoin community. I frankly, I had no interest in finance before I found Bitcoin. I very much approached Bitcoin from the freedom maxi side of things. So it's like, hey, I want something that's basically a middle finger to government, censorship resistant, undermines the system. That's the lens I approached it through. And so listening to a lot of people in the Bitcoin community, reading books, and then kind of diving into things on my own, I've been able to, I feel like, grab a decent understanding of the inner plumbings of the fiat system. And I think really if I had to summarize what's going on in the macro world, I would revert to Lynn Alden's famous quote, which is nothing stops this train. We saw earlier this year, Elon tried to stop the train. He tried to get in and cut spending. And I was kind of laughing when he was doing that because I appreciate the honest attempt. I do think it was an honest attempt, but you can't, cutting fluff around the edges, trimming up some of these three-letter agencies doesn't take away from the 1.5 trillion going to Social Security and the 1.5 trillion going to Medicare and the 1 trillion going to the military and then the 1 trillion going to interest payments. And that number is rising very quickly. And so the debt is spiraling out of control and they're not going to let it come to a brink of, massive defaults everywhere. They're just going to print dollars and devalue the debt in real terms. And so people that hold Bitcoin, that hold real estate, that hold valuable equity in companies, they're going to see their purchasing power either increase or maintain the same. But people that hold bonds and hold dollars, they're going to get absolutely roasted over the next decade, like they
Right.
have for the past 5 decades, or past
So
5 years, rather.
that I when you were talking, it reminded me we've got roughly 60% of 9 trillion. So let's just say 5 trillion that needs to be of treasury debt that needs to be refinanced between now and July 9th. And I feel like there's such a short window of time left, right? And we have Jerome Powell over here seemingly not willing to lower rates. So is that going to change really fast? We also have gold flowing into the United States at an astronomical rate. You've got a Secretary of Treasury, Dissent, that's talked about the importance of gold in the system. He's very pro Bitcoin. Like, we're getting to like some very crucial decision making here where we're either going to refinance all this debt at high rates again, in which case we haven't solved the ongoing interest rate expense. That's only going to get worse. We have this big, beautiful bill, right? That's good. That says we're going to spend money. What is like, there's so many different cross currents that don't seem to be making sense. It seems to me like just creating a point of chaos. that could be coming in short order. So I'm wondering what your view is of all that when you look at all those cross currents.
Yeah, I absolutely do think it's a critical decision-making time. And to cut Powell some slack, what he does to the federal funds rate really doesn't matter. It's the 10-year Treasury that matters. It's the long-term rates, and nobody's buying them. Look at historically who have the buyers of long-term Treasuries been. It was foreign countries which have been not buying for the last decade. They have been decreasing their exposure. One, it's kind of a bargaining chip. Then put your shoes in the put your feet in the shoes of enemy countries, right? Like Russia had their treasury assets frozen in 2022. You think China and Russia and Iran, all these other countries are going to see that and want to buy treasuries? Absolutely not. Next, who else was buying treasuries? Well, it was the banks, and they got absolutely fleeced. Just see Silicon Valley Bank in 2023. They were buying long-term treasuries when rates were basically near zero. They got absolutely wrecked. A lot of the banks still have heavy unrealized losses on their balance sheet, and I get, it's a hold to maturity asset, but do you think they actually feel comfortable seeing a paper loss of 50 to 60% on the long-term treasuries? Absolutely not. So really the only kind of natural source of treasury demand is pension funds and bond funds that are legally required to do so, but they're having solvency issues. That's pretty well known. As the pension funds are not able to meet their obligations, they're not generating enough returns to pay out this baby boomer generation that's retiring. And so in order to prevent the treasury from refinancing at this higher rate, is right now, I think the blended average on all their debt is around 3.5%, but all the treasury rates now are 4, 5, 5.5%. And so their blended average is going to go up with this big refinancing that's due. And so the only way to prevent that, you have two options. The Federal Reserve can lend them the money. They can come in and buy treasury bonds, keep interest rates from going too high. I think that's the most likely approach. Now, whether they do it explicitly or they do it implicitly is yet to be seen. I kind of think it's something they would like to keep hush hush. They could come up with all sorts of fancy three or four letter named facilities that are money printing in disguise. But the second, and this is what would be best for America and American citizens, would be BIT bonds. So if the Treasury issued a note that has, hey, borrower, you're going to lend us the Treasury money, we're going to take 10% of that and buy Bitcoin. And at the end of the 1, 3, 5, 10, 30-year note, whatever it is they issue, we're going to get some of the Bitcoin and you're going to get some of the Bitcoin. So it splits the upside. Now, Paul, people like you and me, we're not buying that product. We're just going to buy Bitcoin instead. But these pension funds and these bond funds that have Treasury mandates, that is money for them because they're able to get their feet into Bitcoin, but also have protected downside exposure. And so I think that would be one way the Treasury could really drum up true organic demand for treasuries and allow them to borrow money. And they could do it at a lower rate because one of these funds, they'd be willing to lend money at 3% in exchange for some Bitcoin upside versus lend money at 4.5% for zero Bitcoin upside. So if Scott Bessent, the Treasury Secretary, was listening to this on the off chance, I'm sure that's already crossed his mind, but that's your only realistic way forward. And if that truly happened, the lid's blown off, Bitcoin could go to $500,000 within months.
Yeah, I do. I mean, obviously, I think all of us as Bitcoiners understand that solution. I wonder though if the current administration is ready to make that move yet, or if you think they might be more inclined to do something like that with gold or revalue gold prior to that moment to fund the Treasury General account. Do you have any thoughts there?
Yeah, I think from the way they've been talking recently, it seems like I think they could do it. I wouldn't be
Wow.
surprised. I would put it at a 50-50 chance. They've
Wow.
been referencing Bretton Woods and the need for a new era and how the Bretton Woods era is over and that a big monetary change is in order. I would say the only way they do it though is if they've already secretly accumulated a strategic Bitcoin reserve.
Right.
Perhaps by using a Virginia headquartered software company as a proxy vehicle, if you
Sure.
read between the lines there, right? If
Right.
strategy is the SBR in disguise, I think that's what they're going to do. But if they don't have any, big enough Bitcoin bag themselves, I don't think they make that move.
So you just said the quiet part out loud about strategy.
Yeah.
I'm with you. I mean, you always try and keep those options in my mind. Um, yeah, and who knows what Jason Lowery's been up to if he's got some program mining Bitcoin for some Virginia software company. But
Could be.
yeah, it's it's an interest. It's we are coming up on some very interesting times, right? So we're a lot of this stuff is gonna emerge out of the murk, and we're gonna see what's really going on in the near future. Um,
Mhm.
so that I mean, getting out of that because we're never gonna know for sure what governments are doing and where we're at. We can always speculate, and we all can make the assumption that eventually everybody gets Bitcoin at the price they deserve. But do you think that Bitcoin, as far as its sort of natural trajectory to replace other assets, where do you think it goes first? Do you think it's going to come from real estate first? Do you think it's going to come from treasuries? Do you think it's going to come from stocks? Like, if this pristine asset is becoming the dominant store of value, and it starts to pull capital out of all those excess houses that boomers have been storing capital in, and all that excess, equity investment that they've been overpaying for and driving PEs up. How do you think where does it soak up capital first? I guess is the question.
Yeah. I think it soaks up capital all at once from these different entities, but I think the most is going to come from the equity market and the bond market. So those are the primary way people save wealth. They buy the S&P 500, brain dead, automatic for 40 years. They buy that and they buy government bonds, and it's their de facto savings account. And I think one way Bitcoin sucks capital from those entities is I view it as kind of there's a chasm. You have a cliff over here that represents the Bitcoin world, and you have one over here that represents the fiat world and all those assets. And the more bridges we can make connecting these two chasms, the more capital that's going to come and the quicker it will. And so the first major bridge was the ETFs, which launched in January of 2024. That allowed people to take capital in an existing equity account and buy Bitcoin. Other bridges are MicroStrategy convertible notes. Those specifically target the bond market. Other bridges are now all these Bitcoin Treasury companies and all the spin-off products that they're going to create. And so the more connections we can make, the quicker that capital is going to draw. I do think maybe this is kind of a contrarian take in the Bitcoin world. I think we take some capital from real estate, but not as much as people actually think, because real estate does have some consumption value. You know, I could see wealthy Bitcoiners still want to buy a house in the beach, a house in the mountains, and a house, in some big city, right? I think if we will take some of that capital, but I think we'll take the majority of it from the bond market, from the stock market, and less from real estate.
Yeah, I'm glad you said the way you described the convertibles and other ways people are getting exposure to Bitcoin. That part I do see as a really interesting Trojan horse, because now that person who's just DCAing in the S&P 500 has some exposure to Bitcoin, whether they know it or not, right? And the more treasury companies we get in the system, the more all of society will benefit from this, as long as they're good actors, which goes back to you calling out Saylor with your question. So that's why it's so dang important for us to sort of keep holding that torch and shining a bright light where we can. So it's a really interesting Trojan horse scenario when you start to look at it, and I think there will be longer term values there. Um,
Yeah.
and there'll be
Especially
some
the idea
companies like
of
I'm sorry.
Yeah, especially like the idea of strategy getting in the S&P 500. I mean,
Yeah.
that is where the tides really start to shift, because Bitcoin will be in the portfolio of every single person on this planet. So if Bitcoin draws down, strategy is going to draw down, the S&P 500 will be impacted negatively on that. And so, that would be the first kind of way that Bitcoin really becomes too big to fail. But once you have 5, 10, 15, 20 different companies in the S&P 500 that hold Bitcoin, then it's really too big to fail, because a drawdown in Bitcoin will cause all these portfolios to draw down.
So, there's some recent economic data, business cycle data that shows that the economy is slowing down. So there are fears from some people about a looming recession. When to be determined. China's been printing enormous amounts of money to add liquidity to their economy. It seems like, the European Union is pushing, and NATO is pushing hard for war, which is, seems, if you look back through history, is a cover for creating liquidity. We have the big beautiful bill coming. What is that like when you start to look through your crystal ball and you start to look out to the rest of 2025? What does that look like for liquidity, and what does that look like for how it impacts assets, and specifically Bitcoin, obviously? But, because like in the past, when we get liquidity, you'd be like, oh, all assets go up, all assets go down, in unison with these increasing. Like, are we going to get a division now? Are we going to start to see people discern between, I'll just DCA into the S&P 500 with all this newfound money, or do I actively say, no, I'm no longer supporting that, and I'm going to go buy Bitcoin?
I don't think we see that from the retail level, but I think we see some of that from the institutional level. So liquidity is on the rise. That much we can look at all the data and say for sure. Given the massive amount of refinancing that's necessary, liquidity is going to have to increase. If they want nominal GDP to increase, it's going to require liquidity to increase. And so I don't think that's really up for debate. But yeah, then the question is how much of that actually flows into Bitcoin versus other assets. And historically, what we've seen is Bitcoin is the most reflexive to changes in liquidity. And it makes a lot of sense because it's the only asset that's traded 24/7, 365 all across the world. It has a perfectly finite supply. It's a neutral digital commodity with nobody in charge. And so I think we'll see some institutions start to put additional liquidity into Bitcoin. But I don't think we'll see that on the retail level. But I don't think we need to see that for Bitcoin to do well, because this is, my baseline thesis is it doesn't matter if we're in a technical recession or not, if we've had two negative GDP growth quarters in a row. Like, the economy is in a bad state for the average person. We've been in a period of stagflation since 2020. Whether, nominal GDP is up and some of the economic data has looked good, right? Like, since 2022, people have been calling for a recession, and a technical recession has never happened, but people are up to their neck in credit card debt. Savings are at an all-time low. The expenses as a percent of income, so rent, gas, food, this is taking up a lot of the income that the everyday American makes. And so, anecdotally, when I put my vibes indicator on and, put my finger up in the air and talk to my peers, nobody's doing good, especially in the millennial and Gen Z generations, right? The boomers and the older generation that have assets, they're doing fine because their assets are able to keep up with the rising liquidity tides. But the generations that don't have assets, they're not doing very well. And so, hopefully some of them will start to save in Bitcoin. Of my peers, those that have been saving in Bitcoin are doing pretty well for themselves, and those that haven't, it's an entirely different story. And so I think what we're going to see is we're going to see this divergence continue. So there's going to be almost two parallel economies. You'll have the Bitcoin economy, or just you could call it the asset economy in general. People that save in assets and people that save in cash. And we're going to see that divergence continue, and it's going to become more drastic over the next few years.
Yeah. So you think we could see, obviously a greater gap between the haves and have-nots, and
Absolutely.
that is a risk for um, powers that be, right? Like if you look back through history and you look at the outcome of those kind of events. So is that, obviously in my mind, that's why you see the European Union pushing so hard for CBDC, smart cities, all these things that they're pushing for, because they see that point in time coming. And it would allow them to have more control over the populace prior to that event. Um, are we potentially seeing controls like that coming in the United States? Do you think that stable coins could be used against the American population? Do you think that we'll have some states that are free and some states that are not? Like, do you have a vision of that from, because I think what people miss is they kind of think of that as just like a, oh, we elected the wrong person thing. They don't see it from the big cycle of macroeconomics and how that is reflected through socioeconomics.
Right. You're right. A lot of people don't see it as that. They think, oh, if I get my guy in, this will be all fine and dandy. I absolutely do think if they were to do a central bank digital currency, it would not be labeled as such. It would be a private entity or bank issuing a stable coin. They would be able to implement the same kind of totalitarian control
Yeah.
because it's an oligarchy, right? There's an elite class of bankers, of politicians, of private equity firms that really are working in unison. And so the CBDC, just saying that already has a bad taste in everyone's mouth, even normies included. They're pretty much like, oh yeah, that would be a terrible idea. At least America speaking. I don't follow Europe. I think Europe is
Yeah,
they're
no,
done for.
I believe that sentiment is global.
Yeah, yeah. And so it would come from a stable coin, and hopefully I think I'm optimistic we would see resistance at the state level. That's one of the things that makes America awesome is you have 50 sovereign states that will all decide how they want to govern themselves. I mean, if we're going really down this rabbit hole of totalitarianism, the biggest risk is artificial intelligence getting all this data on us and being able
Yeah.
to create fake personas online and knowing everything about what we do, like the
Right.
Palantirs of the world building all this infrastructure. There was something in the bill, the big beautiful bill about states cannot pass laws to block the federal government from using AI to spy on their citizens. Like that
Yeah.
stuff freaks me out, but
That's crazy.
honestly, I don't worry too much about it because it's out of my control, right? As
Sure.
an individual, the best thing I can do is I can, take care of myself, my family, stack Bitcoin, take care of my spirit and my body and my mind and
Right.
hope for the best.
Yeah, for sure. I think there's going to be some sort of future bifurcation between AI and human consciousness. Like, would people have to, like, maybe a part of the awakening are people figuring out that they're connected to something greater than themselves and that they can use that to create abundance and sovereignty and not participate with this AI. I don't, you mean, or use it so that they can use it as a tool but not be affected by it. So I don't know. But it certainly just seems to me like if you just think of human consciousness becoming a scarce asset because they're so dialed into AI, how valuable somebody who's not chipped and not and is connecting to something and downloading information from consciousness as opposed to a server. Like there's going to be something there at some point in the future where that's going to be like the Michael Jordan of humanity, right? That person that has that capability is going to be more
Right.
greatly valued than someone who's just like, oh yeah, no, I'm chipped and I just my AI helps me.
It's
I
creepy
don't know.
stuff,
That's
man.
what's that?
It's really creepy stuff now that we start thinking about it deeply.
Yeah.
But what if there's one thing COVID taught me, it's that most people, not us, not Bitcoiners, but most people, they value safety and
Yeah.
comfort above all else. That's their highest priority. And so you're gonna see an overwhelming portion of the population give in to an AI totalitarian system because the narrative from the powers will be, hey, this is to protect you. This is to keep you safe. We can monitor you guys, make sure nobody's committing crimes, make sure nobody steps out of line. We can prevent terrorist attacks, false
Yeah.
flag attacks, and all that stuff ahead of time. And so you're going to see a lot of people give in, and it won't be us, but it's going to be an interesting world to see.
Yeah, I think the arson and the firefighter have got a lot of things on their agenda. We'll see what happens. So, we'll end on a happy note here. What's your price target for Bitcoin in 2025?
250,000. I
Okay.
think we could see Bitcoin make quite a run here in Q4 and even Q3.
Do you think it's so just like an extended 4-year cycle, like a little longer cycle than we've been recently having over the last 3?
Yeah, though this might be a conversation for another time because I actually think the 4-year cycle is done.
Okay.
I've got my reasons for believing that, but I'm trying to shift my vocabulary into using the word epoch instead of cycle because
Okay.
cycle implies that it's going to continue to happen the same way over and over.
Yeah.
I think given that kind of chasm and bridge analogy I mentioned before in the emergence of institutional capital, I think Bitcoin just becomes so much more intertwined with liquidity rather than having cycles. And I think, I don't expect a 75% drawdown. I could see us, having a great bull market to close out the year, but I don't think that will be followed by a massive drop in the price. With the caveat being, if we go to $1 million in 2025, yeah, we'll probably pull back a fair bit. But liquidity is on the rise. We're seeing the corporate institutional adoption race accelerate. And so Bitcoin, as Jack Mahler says, the Bitcoin price is a function of fiat liquidity and adoption. I very much agree with that. And I think we're seeing both of those factors work in the bull case right now. Liquidity is rising, adoption's rising, adoption of people that have money, mind you.
Yeah.
It doesn't matter if we get more steak and shakes and medium of exchanges or these third world African countries start sending Bitcoin on their Nokia phone from 2000. Like, that's not moving the price. What's moving the price is Larry Fink and the boys piling in. And we're seeing that. And given the direction that global liquidity is already headed, I think we could see some pretty juicy Bitcoin numbers by the end of the year.
Interesting. What do you think? I mean, that's a very interesting take. And so it is very much dependent upon Federal Reserve, Treasury, others, global central banks providing liquidity. Would you say that's accurate? So,
Yes, to some extent, but that's all asset prices, right? If the
right,
Federal Reserve and other central banks stop providing liquidity entirely, like
everything
the
goes
price of
down.
every asset would
Then you better
tank
have
big
Bitcoin
time.
because even if it goes down, you're preserving your purchasing power because everything else will go down faster.
Right, like that would create a deflationary spiral and bust, in which case most people's assets are actually the liability of someone else. So most people,
Yeah,
they are owed money. And so if nobody's paying back their loans, your bond portfolio is going to zero
right.
versus Bitcoin is still this bearer asset that you can exchange.
I'm glad you brought that up because this is I've had this conversation with a few other people. When it's the top, I'm gonna sell. I'm like, that's not necessarily a good idea because you're gonna move everything into fiat. And so let's say you didn't sell your Bitcoin, right? Let's say Bitcoin goes to 1 million, you don't sell any of it. And we go into a massive liquidity crisis. We get a 1929 like deflationary bust. The only asset that's going to have value at the end of that is going to be the assets that are nobody else's liabilities. So like,
Right.
do you have farmland? Can you grow your own food? Do you have access to water? Can you take care of yourself? Do you have skills? And do you have Bitcoin and maybe some gold? Those are going to be like those key pieces of uh of a lifeline. And if Bitcoin went from 1 million to 100,000, that means that the dollar went to a penny, like in purchasing power. So you're still going to keep your spread, right? So if a dollar is a dollar and you're at 1 million, and you're still going to keep that spread in purchasing power, regardless of the price of Bitcoin, even in a
Right.
deflationary bust. And I think if you follow Jeff Booth's work enough, you can begin to grok that. And it really, if people understand that really makes the case for just accumulating as much Bitcoin as possible and never selling. Because if liquidity comes in, you gain purchasing power. If liquidity goes out, you maintain your purchasing power. And there's no other asset like that. Because I mean, gold is papered over all over the place already too. So
Right.
um, yeah, I think that's a good thing for people to keep in mind. Before we wrap up, is there anything you think currently in the Bitcoin world that we're missing or is a narrative people aren't aware of and should be, or they should be paying attention to?
Yeah. One thing is there's been a lot of drama around this big, beautiful tax bill, and there's certainly a lot of bogus bullcrap in there. but you need to pay attention to it because if it gets passed, you will be able to depreciate 100% of a Bitcoin miner in a single year. So let's say the end of the year rolls around, you have $100,000 in cap gains, Bitcoin's done well, you took some to buy a house or a car, whatever, treat yourself. You have this capital gains tax. Well, you could buy ASICs from Blockware, see the sign behind me, and you'll be able to write off 100% of that capital gains tax. So no tax bill, and you'll be able to have a machine that prints Bitcoin for you. So that's something to pay attention to. If this bill actually gets passed, there's a good opportunity there to decrease your tax burden come April 2026.
Good. There's a silver lining. Awesome.
Right.
Awesome. Well, Mitchell, it was awesome speaking with you today. Thank you for everything you've done in the community, and thank you for joining us.
Thank you for having me, Paul. I enjoyed it.
Awesome. Thanks, buddy.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.